is our January rally? Is it losing steam, or is this just a bit of a hiccup? Because right now, of course, we're seeing all the indices up.
I think we're in a situation, Frank, where a lot of investors are looking at this in terms of, great, there's some enthusiasm about the Fed potentially not being as restrictive, but that's really being offset by some concerns, particularly from messaging early on in earnings season about the potential for a slowing economy. And I think when we came into this quarter, one of the things we had experienced in the fourth quarter of 2022 was significant downgrades in earnings expectations for quarterly earnings, but also a lot of uncertainty as it relates to calendar year 2023. So in as much as we're always looking at, the potential for one quarterly print to move a stock, I think right now what investors are really looking for is, how do some of these recessionary concerns or potential recessionary concerns play into the outlook for some of these companies? Is this rally that we've seen really in risk on warranted? And is this just an example of the type of trading activity that we're going to experience throughout the year as investors try to price in or out the threat of a recession, with the acknowledgement that just because the Fed becomes more accommodative doesn't necessarily mean that we don't have some tougher road ahead?
Yeah, I mean, Jenny, absolutely. I think Shannon laid it out really well. By the way, just a second ago, we showed the banner, the Dow turning negative for the year. What do you think about this January rally? Again, indices up today, but are we seeing the beginning potentially of a downward trend going forward?
Well, I love that we're calling the S&P was up, 4.5%. I love that we're calling that a rally. Oh. Yeah. So let's keep a little context anyway. But I was joking before the show, and I was saying, well, if we had sustained that up 4.5% in 3 weeks, that would have suggested the market would be up 50 or 60% this year. In the world of no guarantees, I'm pretty, confident guaranteeing it's highly unlikely that we're going to have a plus 30 to 40% year. So if we have that in the context of thinking about the fade and say, all right, most of us kind of at best are thinking that we eke out a marginally positive return on the year. Some people are thinking of down. What else could we have expected? We couldn't have sustained that pace. And so my thought all along has been that hopefully we get to year end with a positive return at the end. And if we start the year off up 4.5%, it's going to be nothing but a roller coaster between now and then. I don't know that that's a bad thing. I think in those kind of markets, there's tremendous opportunity. You haven't missed your buying opportunities. You might get more opportunities to sell things along the way. So yeah, to me, I'm like, I don't even know if it's a fade or anything. It's just the course the market's going to take.
So Jason Snipe, what do you think? A little volatility might be a good thing. Are you looking for possible opportunities and potential volatility going forward?
Yeah, so I mean, if I look at obviously last year, the Nasdaq was down 34%, the S&P down close to 20. If I think at the beginning of this year, I think this is really a story of just repositioning, some energy towards this kind of narrative of a softest landing, and I think that played a role into the markets growing as quickly as they have. But if we're looking at a Nasdaq up around 5%, we're only 20 days into the year. I mean, it's run a lot. And I could see some exhaustion here, and that's why we're seeing some slowdown. Also, as it relates to kind of earnings have been somewhat sluggish. We've had a lower bar, so the beat rates haven't been as high as anticipated. So I think that's part of the narrative playing out, in what we're seeing in the markets today. And then as if I look at it today, this is just financial re-engineering, hearing notes from Microsoft with some cuts, obviously job cuts, Google with some cuts, and I think that's also playing. And then Netflix, as you mentioned at the top of the show, with some really nice earnings last night. So I think that's also playing a role into some of the bump we're seeing today.
Yeah, we have some interesting notes coming out today, Steve. I want to read you a bit of a note that came out today from Barclays. It says in part, U.S. data is weakening, and it is not good news for equities anymore, even as bonds are rallying. Classic recession playbook. I'm just teeing you up, Weiss. I know you want to bring your unique brand of insight into the markets right now.
Well, first of all, I'm going to bring my unique brand of insight into Jason and I, who are also lovely and talented. I understand the omission of Michael Farr, but don't understand the omission of Jason and I.